Q&A ready for finance. Phrasebanks plus printable cheat sheet. In high-stakes Q&A, your mission is simple. Stay calm, concise, and credible. Focus on answering the question, not reacting to the person's tone. Keep emotion out. Keep facts in. Always bridge to your key message, what you most want investors or stakeholders to remember. Use finance-safe, professional language that stands up to scrutiny. Clear numbers, defined terms, and no hype. Think of each answer as a micro press release, a crisp headline, a few facts, and a steady delivery. If you stay structured and measured, you build trust. And that's the real win. Before you answer, make sure you're solving the right problem. Ask, just to confirm, are you asking about X or Y? Narrow the scope with, do you mean for Q3 or full year? Surface assumptions with, can you share the assumption behind that? These clarifiers buy time to think and ensure accuracy, especially when questions bundle multiple issues. Clarifying reduces the risk of oversharing or missing context, and it shows you're careful with data. One clean clarification up front can save a messy correction later. Lead with a headline, a clear yes, no, or the key number. Then give 1 to 2 drivers that explain the result, not a laundry list. Add a concrete data point to anchor credibility, percent, range, or comparison. Close with an action or next step so listeners know what to expect. Example, yes, operating margin expanded 120 bits per second. Main drivers, mix shift to subscription and lower freight. Specifically, subscriber RPU rose 6%. Next, we'll phase marketing spend in H2 to protect margins. This structure keeps you focused and makes note-taking effortless for your audience. Use steady, non-hype language that signals discipline. Try, the key driver is, to spotlight causality. Based on current guidance, we expect anchors forecasts to disclosed frameworks. To put this in context, helps compare periods, geographies, or segments. Our sensitivity analysis demonstrates you've pressure-tested outcomes. Example, the key driver is renewal quality. Based on current guidance, we expect low single-digit growth. To put this in context, that's a 200 bits per second improvement year over year. Our sensitivity analysis shows a plus or minus 50 bits per second range depending on churn. Calm, precise, confidence building. Name risks with balance and plans. Use 2 risks to flag are, to frame and limit scope. We're monitoring X. Contingency is, shows control. Prefer ranges. Range, not a point. Between A and B. Clarify inputs. Assumptions, volume, price, FX. Example, 2 risks to flag are channel inventory and freight. We're monitoring channel sell-through. Contingency is staggered POS. Range, not a point. Revenue growth 2 to 4%. Assumptions, stable volume, modest price, neutral FX. This keeps you transparent without sounding alarmist. Meet pressure with composure and facts. Start with respect. That's a fair question. Here's what we know. If data isn't available, be precise about follow-up. We don't have that split now. We'll follow up by Friday with segment detail. Provide history and trajectory. Historically, variance was X. Trend is improving. Isolate noise. Let's separate one time from run rate. Example. That's a fair question. We don't have the regional gross margin split now. We'll follow up by EOD Thursday. Historically, variance was 150 bits per second, narrowing. Let's separate one-time freight credits from run rate margins. Use a 3-step flow. Acknowledge right pointing arrow, answer briefly, right pointing arrow bridge. Example: good question on marketing timing. Spend is weighted to Q4. What matters for guidance is the conversion rate on that spend. Or, stepping back, the core takeaway is durable margin expansion from mix and efficiency. Keep eye contact and keep numbers simple. Whole numbers, clear ranges, few decimals. Bridging doesn't mean avoiding. It means connecting the question to the message that helps the audience interpret the data correctly, without wandering or over-explaining. Build a one-page sheet you can glance at live. Sections: clarify, structure, Phrasebank, risks, follow-up. Add slots for key metrics: revenue, margin, cash, guidance, with latest figures and ranges. List 3 company-specific drivers, e.g., mix, churn, pricing, and 3 risks: supply, regulation, FX. Include a follow-up table with owner plus deadline for any data you owe. This sheet keeps answers consistent across speakers, reduces on-the-spot memory load, and ensures commitments are tracked and closed after the call.